Hello everyone, welcome to this video lecture. And in this series, I'm going to introduce you to a course, a technical analysis course, which is wholly based on learning technical analysis from scratch. So these are some topics that I've kept in mind. Introduction to markets and technical analysis, the core tools, charts and candlesticks, market structure and trend analysis, support resistance and price action, chart patterns, psychology of the crowd, technical indicators and oscillators, advanced technical concepts, behavioral finance and trading psychology, risk management and position sizing, building a trading plan and strategy. So these 10 modules are going to affect you in various ways where you learn how to trade. If you're an index trader, that's also good. If you're a stock trader, that's even better. So we'll start with module 3 today and we'll learn trend is your friend is a core tenet of trading. This module teaches you how to identify and validate market direction, defining a trend, uptrend, higher highs, higher lows, downtrend, lower highs, lower lows, sideways, ranging markets, drawing trend lines and channels, best practices for plotting accurate lines and understanding channel boundaries, Dow Theory Basics, the three phases of market trends: accumulation, public participation, and distribution. Volume analysis, now trading volume, how trading volume confines a trend or signals a potential reversal. So let's begin. This is Ashok Leland chart. We'll learn the entire module in this chart. It is basically a map of how your trading journey will begin. So you can see at this area there is in this area there is volume spikes as well as some accumulation. So going by Dow theory, accumulation happens in hindsight. It is completely non-seen. And then at this stage, when volume is bigger than the previous volume, public participation begins. Joining lows is what makes an uptrend trend line. That's how you create a joining low and then you make a trend line. Whereas a channel is made something like this. When the channel breaks, the trend is broken as well. In my previous videos, I have talked about moving averages. You can understand these moving averages even better when seeing this chart. This channel got broken and the trend changed. Then again, there was huge volume accumulation and price went up, even nearly the 50 moving average, but then it did not sustain. So we can clearly see that accumulation happened, then public participation happened, then distribution happened. This is the structure that Dow theory gave us. And then we can see the sideways range. This chart tells us the entire picture of technical analysis basics. It tells us of the forms, it tells us of the shapes, it tells us of position sizing. All the charts enable your multiple hypothesis that there is accumulation at the beginning, then there is public participation, and then there is distribution. This area is distribution, and then there is sideways range. M&M. Now, I encourage you to have stock charts in your technical analysis portfolio, and you study the charts in not candlesticks first, but as OHLC bars with moving averages. In this chart also you can see that it's beginning with accumulation and there is public participation. This is entirely ranging with public participation and accumulation. Then there is a huge downfall of distribution. Then sideways range. Once you learn how to plot these channels, you will realize the three phases of Dow theory and will learn more starting with Dow theory and technical analysis concepts. This entire series is based on how to make you a profitable trader, how to analyze charts, how to do fundamental analysis as well, and crowd theory, efficient market analysis. Efficient market analysis tells us that entire information of global as well as national stocks knowledge and commodities knowledge and various assets knowledge is present on the chart. It is that there is nothing that is hidden from public. You just have to analyze it. That is efficient market hypothesis. Let's see some more charts. Motherson. Now this stock is facing a huge accumulation public participation, but now it is trying to test 50 SMA. Please look on the video of my moving averages analysis, have a look at it, and then you will realize that how important is moving averages for trend analysis. If 50 SMA is going above, that is an uptrend. 200 SMA is driven by support. It is a big support. And drawing channels will enable you to analyze how technical analysis forms shapes. And those shapes help us to make our analysis. Now they don't have to be considerate of entire lows because there is noise in the chart. You have to cut those noise and make a formation that is considerate. Now this phase can result into a distribution era. So we have to also keep in mind of that. So thank you for watching. I shall see you soon.